Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of September 25th through September 29th, where we'll hopefully help you try to navigate the fallout from the Hawkish Fed Hold that we got this week. We'll talk about what did Fed Chair Powell say, what did the members of the FOMC say about future rate hikes, etc., and we'll talk about what is the fallout from that Hawkish Fed Hold. So let's get started. So here's our Google document with our notes for part one of our weekly trading game plan for the trading week of September 25th through September 29th. We put our notes for our weekly trading game plans in publicly accessible Google documents so that you can refer back to them. Also, we have bonus links to bonus videos, the tools and resources we use to put together our weekly trading game plans. So you can find a direct link to this Google document in the description box below. We store all of the notes documents for our weekly trading game plans in a publicly accessible Google Drive folder. And you can find a direct link to that Google Drive folder also in the description box below. So you can refer back to these notes as well as the notes from our previous weekly trading game plans. Good morning again, Nagam, Alan Krantz. Thank you all for joining us in the live chat today. Hope you all had a good trading week and are doing well. So we'll start out and look at how the markets ended up on Friday. You see it was a little bit of a roller coaster ride. They started up, dipped back down, and then towards the end of the day we had a pretty severe dip, risk off, dip on all the indices towards the end of the day. So we ended up with 41% advancing, 54% declining, only 10% new highs, 89% new lows. Got 20%, only 20% above their 50-day moving average, 80% below, 35% above their 200-day, 64% below. So we see towards the end of the day very bearish. So we had a couple bullish indicators and then very bearish. See from the heat map, mostly red. Profit taking, the only strong greens were Apple, Nvidia, looks like Broadcom, etc. Earlier in the day, I saw the mega cap techs were green, so again, kind of a flight to safety, but again, and then some profit taking probably towards the end of the day from the mega cap techs. Welcome to Ricky Khan, Flip of the Shippa. Thank you for joining us also. So quick news, housing startups. Government shutdown looming. We hear a lot of news, a lot of talk about that. Economy's about to slow down. AI fantasy fades. So we talked about the AI bubble bursting quite some time ago. Another weekly retreat. So we see oil. Oil broke above 90. It's kind of hovering around that 90 level. Again, it broke up above 90. Now 90 is a good support. Natural gas, again, been pretty range bound between 250 and 3. We'll see it's tested that 275, 280 area a couple times and then retreated. Gold had it's getting resistance at 1950, so we'll see it's testing that 1950 resistance level, bouncing back down and then trying again. See the Dow, S&P futures are down, NASDAQ flat. Dollar's been very strong. Last I saw, the DXY was up over 105 again. It's kind of interesting. I think gold and silver held up pretty good against the strengthening dollar. We'll see many of the European currencies or all foreign currencies are relatively weak. Treasuries did decline a little bit, but again, after this hawkish Fed hold, we saw the treasuries, surge up, which again puts downward pressure on treasury prices as well as growth stocks, etc. Welcome to Crow, Easy Mike. Thank you for joining us. Hope you all are doing well. So let's look at the indices. Look at the SPY, S&P. See very near term, so it broke down below support. Now that support level is providing resistance. We see that significant gap down, so pretty severe downward pressure. We've got plenty of room to fall here. So again, very bearish looking chart on the S&P right now. Look at the weekly. Again, we see it broke down below the near-term trend line. Very bearish, very severe drop. We see it's got, plenty of room to drop below for that 50-week moving average. So again, very bearish going into this week. Look at the NASDAQ. Again, very similar, although it looks like it's potentially going to test the most recent low. We'll see if it gains some support there. Again, it's broken below its near-term moving average. Again, we'll see if the NASDAQ can get a little bit of support, get a little bit of a bounce. But again, very bearish going into this week. Dow. Very similar. Again, broke down below the previous low, below the moving average. Still got some room to test the longer term moving average. So again, we'll look for a downtrend in the Dow as well. Russell IWM. And it broke down even below its longer term moving average, down below the previous lows. Got significant room now to drop down to test the low back from March or so. Look at the VIX. So see the VIX popped up. Looks like it tested 18, close to 18. Again, it retreated on Friday quite a bit. We got just a quick 2-day surge after, again, that Hawkish Fed hold. And then again, a little bit of a retracement on Friday. We'll see if we get another surge on Monday. Again, we tend to get a little bit of a surge in the VIX and volatility after the weekends. And then again, we'll see what the trend is. Again, the VIX has been retracing rather quickly, so we haven't gotten those, big pops like we had back in March. We'll see if we get a test of 20. It'll have to test 18, test, and then see if we break 18, test 20. Okay, we'll look at the groups, the sectors, and the industries from last week. See, the only things that ended up green on Friday were energy and technology. Energy, you're going to see, is a recurring theme. It's been probably the strongest sector. Basic materials, slightly positive. Utilities, again, a safe haven type sectors. The worst performing, real estate, financials. For the week, everything is in the red. The strongest were defensive, energy, healthcare, utilities. So again, flight to safety, defensive positioning, worst real estate and cyclical. And for the month, again, the only strong green was energy. So again, you can see the recurring theme right now is the strong sector is energy, and with oil, up above 90 and projected to go higher. Also, I saw Easy Mike and others talking about uranium. We'll see uranium's been very strong, continues to be strong. Coal had some strength. So again, the energy sector is currently the one with momentum. Again, even for the quarter, we see rotations in and out of utilities. And again, real estate's been very weak. So again, uranium number one. So we see semiconductors had a slight rebound, although it's been generally negative. Have a couple REITs, some other basic materials rebounded. I know aluminum had been pretty negative. Worst solar, farm products, some REITs. Silver and gold, we'll see in the futures, have been rebounding. For the week, again, healthcare, some insurance positive, not a whole lot. Again, silver very negative, rebounded. Copper, solar again very negative. REITs It's interesting. Some of the oil and gas were not well performing for the week, the companies, but the WTI price and Brent price continue to trend upward, as we'll see in the futures. So again, for the month, coal, uranium, coal. So definitely energy, oil and gas. And again, we're seeing, rebounds in silver, copper. So you can kind of see, again, the theme is definitely energy is the place to be right now in terms of momentum trend. And uranium's been very strong. So congratulations to our fellow BeachBum traders who are still in uranium, profiting. Definitely take your profits when that trend reverses. Okay, we'll talk about the economic data from last week. We'll look at the economic calendar in investing.com. I'll quickly go over my comments that I parsed out of Fed Chair Powell's press conference from their Hawkish Hold on Wednesday. And then we'll review again any other economic data in the investing calendar. So they kept interest rates unchanged at 5.5. Again, and we'll look at the impact of this Hawkish Fed hold on the probability of future interest rate hikes. You can see 12 officials saw one more rate hike this year, 7 see on hold. So the majority are saying that, there's a further at least 25 basis point hike coming before the end of this year. I'm assuming that's what caused the negative reaction in the markets after this hawkish Fed hold, as we saw last week that the probability that the market was expecting was a hold through the end of the year. So the market was expecting unchanged rates through the end of this year, even though this was a hold. They're projecting one more rate hike. Unexpected. That was a quote surprise to the market. I'm not sure why. Again, that's what we were expecting. My opinion. We didn't get it this time. I'll express my opinion. I think we'll probably get it next month. And again, that's what the majority of the Fed officials are saying. They say inflation remains elevated. Central banks remain highly attentive to inflation. So you hear the theme. They're still focused on inflation. The job market's still resilient. He commented several times that it's coming more into balance. The job market's coming more into balance. And again, consumer spending is stronger than they expected. So inflation is still well above their goal. So they need to fight inflation. So again, we expect at least one more rate hike in the coming year. So again, just a reminder, none of our content should be considered financial advice. We're not financial advisors. All of our content is my opinion and should be taken as such. Again, all of our content is for education and hopefully some level of entertainment purposes only. So let me grab a quick drink and we'll go look at the economic data, other economic data from this week, and see what's coming up for next week. Okay, so Monday we got some treasury auctions, not overly surprising. Got building permits, a little better than expected. Housing starts, a little weaker than expected in August. Again, mortgage rates been high. They're going to go higher with the expected increase in the Fed interest rate. So we see mortgage rates now went up to 7.31. Applications week on week though was positive. Again, potentially the future rate hike. People, if you're going to get it, Might be able to get a quarter point cheaper now. Crude oil inventories dropped less than expected, but again, the oil price continues to go up. Gasoline inventories dropped a little bit. So here's the interest rate projection, 5.1% for Q3, 3.9, second year, 2.9. So we can see, going forward, the interest rate's expected to go down, but Q3 is 5.6, longer term 2.5. So that was the same, didn't change. Longer term went down a little bit. Second year went up a little bit. So near-term interest rates are expected to be higher. Again, they held at 5.5 as expected, but again, that projection that it's expected to go up, I guess, is what caused the market to react so negatively. Jobless claims was down. The 4-week average is going down. So again, the job market's still resilient. Existing home sales, again, less than expected. Again, you don't have anyone selling their existing home given the current mortgage rates. Natural gas storage was positive, but less than expected. And again, natural gas prices are slowly kind of oscillating their way up towards 3. Again, the blackout period for the Fed governors has now expired, so we're going to hear their coming out talking. Some will be more hawkish, some will be more dovish. Again, we had 12 out of the 19 say they expect a rate hike, so you got 7 that'll comment on a hold. Rig count dropped, which is again interesting. So between the rig count, the U.S. rig count dropping, and the Saudis and OPEC kind of holding the line, they're going to maintain oil prices high. Look at the economic data coming up for next week. So not a whole lot Monday. Again, got Fed officials coming out and talking. So, slight volatility around each of those. Some are more hawkish than others. Housing prices Tuesday. New home sales, I expect the trends along those lines to continue about the same. Mortgage rates are probably going to go up a little bit. And we saw Treasury yields, 10-year Treasury went up, so mortgage rates are going to go up. Crude oil is typical oil and natural gas inventory. And then Thursday, we get GDP for quarter 2. It's expected to be positive. So again, no signs of recession yet. Get jobless claims, core PCE. So we'll get an indicator of inflation. Again, jobless claims. Then Friday, core PCE. So again, some more inflationary data. So Thursday, Friday, along with the Fed officials. And then we get also Michigan sentiment. So this has caused more market volatility than in the past due to the expectations for inflation. We'll see if the consumers' expectations for inflation continue to be high. Look at the earnings calendar very quickly here at investing.com. Again, we should be wrapping up this earnings season mostly, so there shouldn't be a whole lot. Thor, that's recreational vehicles. And you can go through this detail list. Rite Aid, so some retail, some gold miners. But again, a much shorter list, Costco. So again, big box retail. So that'll impact, potentially Walmart, Big Lots, etc. Cannabis, Aurora. So that might have an impact on the other cannabis companies as well as the ETFs, MJ, MSOS. Eaton, so manufacturers, chemicals, etc., some biotechs. Nike, so again, you'll hear, impact on China, CarMax, auto. Bed Bath & Beyond was pretty much bankrupt. Carnival, so cruise lines. So again, much shorter list, and again, you can go through this list and see what impact that might have on anything that you're looking at buying, selling, etc. So again, the next FOMC meeting now isn't until the end of October, so we pretty much got the whole month of October to wait to see if they're going to come out with their next rate hike, 25 basis points or not. And when we get to our strategy section, we'll look at how that Hawkish Fed Hold has impacted the probability of future rate hikes in the Fed rate monitoring tool and the other tools, CME Fed Watch tool that we use to monitor those probabilities. So we'll jump over to the market screen in Webull. See in the histogram, I'm again using the market screen in the online browser version of Webull. We can see advancers and decliners. It's more decliners than advancers, but the percentage of declines pretty small, number unchanged. So again, mostly around the center. It's interesting. We see a reversal from last week in terms of the net inflows. Last week we had an inflow in NASDAQ, and now it's reversed to what we saw a couple weeks ago, where NYSE has a positive inflow, and the NASDAQ has a very negative inflow, and it's decreasing towards the end of the day. So again, kind of a rotation out of technology on Fridays, out of the NASDAQ on Fridays, outflow of money, and some money going into the NYSE, which again is what we saw a couple weeks ago. So it seems like we're back in that previous trend. Another place you can see the near-term earnings calendar again is in the calendar section in Webull. Click on earnings. You can also see dividend splits. Also, they had offerings. So again, you can see who's reporting in the near term before market open, BMO, after market close, or during market hours. So again, you can keep an eye on who's coming up in the near term here in Webull. Look at the best performing industries for the week. Software, a few positives. Healthcare, a few positives. Some investments. Coal, again, we'll see energy, primary theme. Transports, negative generally. Oil, some positive. It's again interesting. Some of the oil companies aren't performing as well as the commodity prices. Not a whole lot of other strength. Miscellaneous education, insurance. So we'll look at the ETFs on Friday. So up on China, emerging markets. So again, we've talked about how to trade emerging markets, and then again, we'll talk about the strategies, the seasonality, etc. But this may be an opportunity. Emerging markets, China, we heard them again supporting their economy, etc. Down on the Dow, short on the Dow, bear on the S&P, short on the S&P, short mid cap, short small cap. Short the yen. Again, we'll see in the futures all the foreign currencies down against the dollar. Bitcoin short. Short the Russell, short small cap. Long China, long China, short Europe. And the NASDAQ short Got a little bit of a mix of short and long in the NASDAQ. So again, a little bit more of a balance in the NASDAQ. It's a little interesting. Industries, uranium, again, very strong. China, uranium, China. Very negative in healthcare, energy positive, technology, China. I guess there's a comment Alibaba is spinning off one of their sectors in Hong Kong. Again, basic materials, uranium, very strong, nickel. Energy, again, recurring theme. Got shippers, natural gas, carbon, metals, shippers. Welcome, Douglas PC. Thank you for joining us. Hope you're doing well. So Asia, 25-year. So long-term treasuries more so than the shorter term. Previously, we saw midterm stronger. Now we've got longer term strong. Got Australian, Yuan, Canada positive, Euro and Swiss negative. So we'll go ahead and look at the futures. Let me grab a quick drink, and again, we'll look at the futures. I guess I'll flip this to the dark theme. See how people like that versus the light in FinViz. Okay, so we can see in the futures for pretty much all of the indices, the Dow, again, is a little bit above its previous low. So, again, very bearish trend. Probably test the previous low. See, it looks like S&P is very close to testing that low. So, again, we'll see if we get a bounce off that low. Again, NASDAQ's got a little bit of room to test that previous low, but it did this very bearish morning star type candle there. So again, bearish signal, even though it did get a little bit of a bounce. Russell very negative, broke down below its previous low. It's got pretty much falling off the cliff at this point. See, the Nikkei was down, had a bounce. Euro stocks testing its previous low, had a little bit of a bounce, bearish bounce. DAX very similar, again bearish bounce. And we see, the VIX gapped up after that hawkish hold announcement, and then it looks like kind of a doji, so we might get, further leg up. We'll probably get a leg up on Monday, and then we'll have to see where the trend goes after Monday, if it retraces again quickly or legs back up. So we see oil, again, now it's getting support. It's oscillating around 90, just a little above 90, a little below 90, gaining support at 90. We'll see, if it legs up above 90, but again, trend very strong positive. Brent, same way. Again, natural gas just been kind of oscillating between, 250 and 3, test 280, broke above a little bit. Retrace back down, but again, it looks like it's oscillating around, just above 260, 265. So again, plenty of opportunities both in oil. If you want to play the trends, we'll look at ETFs in a minute. You can play oil with gush and drip, gush long, drip short. Obviously, the gush trade would have been very profitable, catching that trend. Natural gas, boil long, cold short. I know several of our traders have been making money trading these short-term swings in natural gas. Again, pretty volatile, but plenty of money to be made in these short-term oscillations with the ETFs we've identified. And thank you to those. I know the Crow, and some others, have given us credit for pointing out some of these ETFs, leveraged ETFs, to play these the volatility in these commodities, and we appreciate that credit. You see gold. Trends, now generally positive. It's got to, break that 1950. So again, that's currently resistance. Again, silver resistance at 24. Looks like it bottomed and bounced, trending back up. But again, it's got to break 24. And then we'll see, if it legs back up to test that previous high of 25.50 or so. So again, there's ETFs, to play these swings in gold and silver, we pointed out. Copper got a little bit of a bounce. Platinum bounced and rolled over. Palladium, same way. Corn looks like it's kind of bottoming, been pretty flat. So we have an ETF, corn, to play long corn. If you're interested in that, we can take a look at that. We are currently long wheat. Wheat looks like it's, in a bottoming process, trending down a little bit, testing that previous bottom, but again, it looks like a bottoming process. And we're currently long wheat using the WEAT wheat ETF. So we're currently playing that for that swing back up in wheat. Again, lumber down, and then a little bit of a bounce, but trending down. And again, the yields on the treasuries are generally up, yields up, prices down. Treasuries did get a little bit of a bounce on Friday. But again, as we've been talking for quite some time, the trend is down on price, up on yield. And again, so we're going to talk on our strategy, since we expect a further at least 25 basis point hike at the end of this year. Whether or not the treasuries price that in the near term or wait, we expect treasury yields to need to go up and prices down again. You see the dollar's been very strong, up over 105. Again, pushing the euro down. Japanese yen's been pretty weak. They didn't decide to support the currency. Pound down. Had a little bit of a bounce in the Canadian dollar. Aussie dollar a little bounce, and New Zealand a little bounce. But again, dollar's been very strong. We'll probably continue to hold that strength. And again, I thought it was interesting that gold and silver seem to be pretty resilient and following their own trend, even in the dollar strength. So I hope that all helps. And I agree, easy, Mike. Eventually the dollar will come down. But again, in the near term, we'll get some oscillations, but we're going to get, one more rate hike. And so dollar strength's here for a short term, I think. Okay. Let me jump to our strategy section and cover our strategies for how to navigate this fallout from the Hawkish Fed Hold. And we can come back and look at ETFs, assuming we have sufficient time. So again, let me grab a quick drink, and we'll bring up the Fed rate monitoring tool and the Fed Watch tool, and we'll talk about how the Hawkish Fed Hold has impacted the probabilities for future rate hikes. And again, you can find these tools here. There's direct links in the notes. You can also find these tools, links to these tools, under the link section on our homepage, beachbumtrading.com, bum without the U. So again, if you ever want to look up the current probabilities as they change, as the economic data comes out, as the market digests this Hawkish Fed Hold, You can access those tools again in the link section on our homepage, beachbumtrading.com, bum without the U, at any time. So we bring those up, grab a drink, and we'll look at those, how the probabilities have changed. Also, we have videos that you can access via the links in the notes or on our Beach Bum Trading YouTube channel on how to use each of these tools, how to navigate them, etc. So, okay, so now we look at the Fed rate monitoring tool on investing.com first. We see we've got plenty of time now till the next meeting, which is November 1st. So you can see right now for November, market's still pricing with 72% chance of a hold, only 30% chance of a hike. So again, the market hasn't really adjusted for that. What most of the Fed officials are saying is they're saying we're expecting a hike before the end of this year. They're not expecting it in November yet. And again, they've only got a 60% chance in December. So again, the market doesn't seem to be listening to what the Fed's been saying, what they are saying, that they're going to hike. They're only 37% chance in December. And they told you most of the officials want a hike before the end of the year. So it's either going to be November or December. Again, my humble opinion, I think we'll get it November. I think it's a better timing, seasonality wise. So again, we see that probability. Actually, it went down from Thursday. So Friday, it went actually, the percentage of a hike in November went down, and the percentage in December went down. So again, right now the market's not listening. So again, that sets us up for potential shock. If they do come out in November and hike, we could get a negative reaction like we got this week. So even in January, the probability of being over 5.5 is still less than 40%. So again, right now, as per this Fed rate monitoring tool, the market's not really listening to what Powell and the other Fed officials have told them, that we're going to get another hike before the end of this year. So let's look at the CME Fed Watch tool, see if it says the same thing. So again, now for November, pretty much the same, 74% stay, 26% hike. We jump up to December. Again, 54% stay, 38% hike, and 7% even a 50 basis point hike. So a small percentage of 50 in December. Then January, hold about 50%, about 40%, 25 basis point hike, and about 7%, 50 basis point hike. So they seem to be, relatively consistent. And again, right now, as of right now, the market is not pricing in the probability of that additional rate hike that the FOMC members have pretty much said they expect. So unless something changes, inflation dramatically decreases, unemployment dramatically increases, or get a recession, which again, we're not going to even know if we're in a recession now for 2 quarters past now, so we're not going to know that this year. I don't expect the Fed to change course from an additional 25 basis point hike. So assuming we get this additional 25 basis point hike by the end of 2023, what do we expect the impact of that to be, whether we get it in November or December? Well, higher Treasury and bond yields, right? Interest rates, yields have to go up, which means Treasury and bond prices have to go down. So again, Whether or not the treasuries and bonds are going to price that in advance, or if they're going to wait till that additional hike. We expect, treasury prices to continue down, yields to continue up. We also, expect higher mortgage rates. Mortgage rates are, related to the 10-year treasury. So as the 10 yield of the 10-year treasury goes up, mortgage rates are going to go up. So existing home sales down, potentially new home sales down if the home builders don't compensate for those higher mortgage rates. Also higher money market rates, which means, people will move more of their capital into money markets, short-term treasuries. Again, if you're getting, between over 5% up to 5.5% on your cash at a very low risk, you're going to see more people move their money into those instruments. And again, that's along our theme we talked about for a long time now, is now with higher rates, low risk, there are real reasonable alternatives to stocks. So again, outflow money out of stocks into bonds, into money markets. So again, higher credit card and loan interest rates. So again, credit card debt will go up, loan debt will go up. People's, taking out loans will decrease. Higher cost of capital and credit in 2024. So after they get the additional rate hike in 2023, the Fed officials, Powell, etc., have said higher for longer. They don't expect a cut in 2024. He talked about kind of the criteria for a potential cut would have to be, signs that inflation was under control, or that the economy, was in a recession. And again, they're targeting a soft landing. He believes they can achieve a soft landing. So there's no reason for them to cut anytime soon. So again, cost of capital and credit 2024 is going to be high. So companies may, refinance now or not at all if the cost of capital is just too high. So lower investment, lower capex if it needs to be debt based. So given all of this and that we can't see with any certainty when that additional 25 basis point rate hike is going to be, how do you position your portfolio? How do you navigate this fallout from the Hawkish Fed Hold? Well, past couple weeks ago, we talked about patience pays in the stock market. So it pays to be patient, wait for things to shake out. Again, as the probabilities of these rate hikes shake out a bit, we might get a little bit more clarity. And again, you're making money on your cash. You can go into short-term treasuries, get dividend payers. So again, we'll talk about tomorrow. And again, patience pays. So if we're patient, we can make more money, preserve our capital. And again, you can hear more details about some of our strategies in terms of why we believe patience pays, and how to use that strategy in this video via the link in the notes or on our channel. You can also hear we're wrapping up September. This is the last full trading week in September. So you can hear our video about how to make money trading in September, the best performing sectors, etc. That's, we commented, talked about how September is typically the worst month of the year. So again, we're trying to get through September, being patient. We can wait till the markets tend to rebound in October, November, December. So again, it pays to be patient this week. We might get some, overreactions, good opportunities, and we'll talk about those again tomorrow relative to our shopping list, etc. Also, we've got end of month and end of quarter repositioning at the end of this week. So again, be aware. People will be repositioning. The fund managers will be repositioning their funds for the next quarter at the end of this week as well. We're headed into fall. We'll have the first official day of fall this week. I was going to title this whole week Make Money Trading This Fall. We'll probably do that next week. I didn't really expect such a negative reaction to the Fed announcement, as again, they've been telling us this for a long time. So I was again surprised that we got such a negative fallout from this Hawkish Fed Hold. Again, they held, and they've been saying they expect 1 or 2 rate hikes for a long time. So again, I was a little bit surprised. So we've got a couple bonus videos we'll be probably releasing this week on how the markets perform in the fall, best market sectors and industries in the fall. And you can access those now via the links in the notes. So again, we'll be talking, we'll get through this week, get through the end of September, and then look to position for, again, the historical rebound going into October. So now we can go back and we'll look at ETFs. So if anybody's got a particular category, commodity, ETF you'd like to look at, I see people talking about natural gas. We can look at that. We can look at some of the farm products we saw, opportunities in the futures. So I'll open up our ETF Google Sheet. Just a quick reminder, if you'd like 24/7 access to this Google Sheet, again, once you identify an opportunity in a commodity, category, etc., I jump over to this Google Sheet to try to find some ETFs, ideally, to play that opportunity, be it long or short. Okay, Mike wants to look at DBA, again, some more farm products. So again, just a reminder, you can get 24/7 access to this Google Sheet, as well as our dividend payers and puts ROIC Google Sheets that we'll review tomorrow by joining our Patreon at the All Access or VIP level. So here's our ETF Google Sheet. I'll zoom in a bit. Okay. You can also see, let's look at the screeners tab. We'll look at the technology components. This is kind of interesting. Again, you can access this as well as other screeners on the screeners tab of our Google Sheet, and anytime if you have access to this Google Sheet. So we can see the FANGs broke down below their upwardly trending trend line, kind of gapped down. So now they're headed down to this. Now we've got a downwardly trending channel, and it looks like, they may drop down to retest that, although we've got some support there at that crossing. So we might get a bounce at that support level. But otherwise, drop Lab U, so that's biotech, just broke down below support. Pretty negative, bearish on biotechs. Again, semiconductors, looks like they're testing the lower trend line. You've also got a longer term moving average there, so might get some support, might get a bounce in semiconductors. And actually, we saw a little bit of that on Friday. So SOXL, short term, again, you can trade these short term using SOXL long, SOXS short. And the NASDAQ, again, has got some room, downwardly trending channel now, broke down below its upwardly trending channel, and it's got some room to test that lower support line there. So again, technology components in general, pretty bearish, although semiconductors, again, might get a little bit of a bounce. Also, with the government shutdown, although there's kind of a mixture, defense, government contractors might be negatively impacted by a government shutdown, although, again, I don't personally expect that to last very long. They'll resolve it, but you might get some volatility in that area due to a potential government shutdown. So again, here's LabU. Again, biotech pretty negative. We talked about cannabis with Aurora announcing it has been running, but that's a kind of a risk on play. It's been profitable for those in MJ or MSOS. Talks about China. So China's recently been positive. I know some of our BeachBum traders, you can short-term trade China. It's pretty volatile with yen long, yang short. We have some others also. Also, you can short the China 50. Got a couple coal stocks, BTU, METC. Corn we talked about. Again, I'm not terribly excited about the risk reward profile in corn, but it is close to a 52-week low. So if you want a short-term swing, again, the risk reward profile is 1.3 or so. Easy Mike asked about DBA. Another nice thing with this sheet, you can always do a Control F and find. So there's DBA. So we look at DBAs right now, 2186. So it's significantly above its 52-week low, about 19. Risk rewards not all that exciting from a near-term standpoint. But once we get down to the bottom, then it gets more attractive. So again, that's why I'm more interested in wheat, WEAT, than corn or DBA. So again, DBA, we'd like to see it lower to get a better risk reward. And again, it's got some room above its 52-week low as well. So I hope that helps, Easy Mike. Again, if you have access to this Google Sheet, these price columns update with the Google Finance function, not quite real time, about a 20-minute delay, but it's you can see the change and then also all the risk reward profiles that we've identified. Getting plenty of opportunities for longing or shorting gold. So you see miners as well as GDXU is the long on gold. Dust is a short on gold, or DZZ or GLL. Get natural gas people were talking about. So again, long boil, short cold. You can also use UNL, UNG. Oil, again, gush long, drip short, or SCO short, UCO long. We have, I see people talking about, EWA, Australia. So we've got a number of emerging markets. So we talked about SOXL, long semiconductors, short, SOXS, again, silver, AGQ long, CSL short. Also got a miners, SILJ. And then treasuries. And again, I want to talk about this a little bit. We've talked for several weeks about the seasonal trend that we've been watching, and we're going to continue to watch this. So TLT, again, with the 25 basis point hike coming, we expect bond yields to go up, prices to go down. So we see TLT, it made a new 52-week low. I guess it was like a 7-year low or so, and then bounced back a little bit on Friday. So long TLT or TMF, short TBT. So again, this is a trend we're going to be watching for a bottom. Again, we're expecting another rate hike, so yields go up, prices go down, and once that bottoms, I think there'll be a long-term opportunity in either using TLT, or tomorrow we'll also look at the dividend payer that we've been watching relative to TLT, which is TLTW. So uranium, got several ETFs for that, US dollar, etc. Again, wheat, we're currently long wheat. You can see at bottom 571. It's pretty close to the bottom. So I think, there's still some opportunity if you're not already long wheat and you're willing to trade that. There's some opportunity there, decent risk reward. We also have some ETFs to trade some foreign currencies like yen. And again, it's, close to its bottom. But the near-term risk reward, I'm not too excited about. So again, if you want to play a short-term bounce in some of the foreign currencies, you can do that. And you can find ETFs for the various foreign currencies also in our ETF spreadsheet. So I think Easy Mike was mentioning Australia, EWA. So again, you can find additional ETFs that really don't have the risk reward profile that we generally like, which is 2 or better. But you can find additional ETFs on the research tab on our Google Sheets. You can see Brazil. We've got more China. We've got some Mexico's, Germany, Europe, etc. So again, you can find even more ETF alternatives on the research tab. So if you don't see the one you're looking for on the main ETF sheet, then please check the research tab as well. So I hope that all helps. Okay, so got just a couple minutes and then we'll wrap up. So if anybody has a quick question or you have another ETF you want to look at real quickly, we can do that. Again, tomorrow we'll look at dividend payers. We'll also talk about another income strategy while we're waiting for the market to finish up September, bottom out, and head into the uptrend into the fall. We can pick dividend payers. We can also sell and buy back various options, be it covered calls or puts. Ellen Krantz asked about China selling bonds. Sure. Won't that impact the supply and demand? Yeah, sure. And also the treasuries also has to sell to pay their debt. So again, demand, that's supply. And that does, the treasury has been flooding, the treasury market with treasuries to pay down the debt. And you can see that economic data in the treasury's balance. So if their balance decreases, then they're going to have to sell more bonds to pay the debt. And again, they flooded the market with like $1 trillion in bonds after they got the debt ceiling raised. So the majority of that flood is probably over. But again, if China sells some bonds, then that would impact it, and they would be getting dollars then for those bonds. And Easy Mike thinks China's done for now. Yeah, I haven't heard a lot of additional selling of treasuries by China. And Easy Mike says Japan selling, and yeah, so they're selling. So then they were a major holder of treasuries too. So there's plenty of supply, and that's going to keep the prices on treasuries down and yield up. And again, the seasonal trend we've been watching may go all the way through October. So we'll keep an eye on that, and we'll be discussing that going forward. So let me wrap up. If anybody has any further questions, comments, etc., please put them in the comments of this video. Let us know how we can improve our weekly trading game plans, our videos, our tools, our Google Sheets, etc., our community. Again, we've got a free Discord that you can join, continue these discussions. You can ask us questions in our free Discord. You can find a link, an invite to our Discord in the description box below. You can also find that invite and links to all of our other social media sites and other groups, discussion groups, on the links section of our homepage, beachbumtrading.com, bum without the U. So again, if you have any further questions, comments, etc., please let us know in any of those ways, and we'll try to respond as soon as we're able. So thank you to everyone that joined us in the live chat today. If I missed your question, I apologize. Again, please put it in the comments, etc. We can try to address it tomorrow or subsequently. And I hope to see you all back tomorrow, same bat time, same bat channel, 10 a.m. Eastern for part 2, where we'll be selecting our top swing trading stocks to watch, those in our bullpen, shopping list, etc., for the trading week of September 25th through September 29th. Thank you again. Have a great day.